This is NDTV, and you're watching NDTV Profit in association with NSC.
Welcome back. You were with us here on Opening Fire. You got 8143 on the Nifty, 20 points higher, about a 0.25% or so this morning. So the gap up high was there, and then the markets come off a little bit from there, but still steady as things stand. Mehrab Irani is with me here, and he's General Manager, Tata Investments Corporation, manages a lot of money in equities and debt across both asset classes. Mehrab, thanks very much for coming in. Good to have you here. Are you bullish, Mehrab, after the near 11% correction from the peak?
Yeah, good morning, Prashant. Thanks for calling me. If you see, yes, the markets have corrected almost 11%, but the valuation terms, if you see, it has corrected by more than 15%. If you see the results for this fourth quarter, they were very dismal. There was a top line, the bottom line, the EBITDA, everything actually saw a negative or a degrowth. If you see the sales actually came down by 4%, EBITDA came down by 11%, and the bottom line came down by almost 10%. So the results were very much below what analysts or street were expecting. If you see the valuations, even after a 10% correction, today we are valued at almost 16 times forward earnings, because the earnings have actually been downgraded. While if you see a quarter back at almost 10%, when Nifty was close to 9,000, that time we were valued at almost 15 times forward earnings. So the valuation has corrected by more than 15 to 18%. So, and on the ground, if you see, when we meet and talk with a lot of companies, so little bit people have started to losing little bit patience. If you see, the government has been talking a lot of things, but I think now the people want some kind of action what has to happen. And if that doesn't happen, then I think there is some cause for concern going forward.
What kind of earnings expectations are you building in now, Mehrab? Because financially year 15 was extremely poor, and as always, the start of the year, analysts build up very high numbers, and then slowly they get smaller and smaller. It's already happened for financial year 16. Some are saying now 12-13% is reasonable. They started at 18%. Where do you stand?
Yeah, if you see, last year also the same thing had happened. Initially, people were expecting almost 17 to 18% growth, but what actually turned out was a negative growth. It was, in reality speaking, it was worse than the Lehman Brothers crisis also. So that was the kind of worst earnings growth which has happened in this quarter. If you see, a lot of the pockets, a lot of the segments, like example, the defensives, like the IT or the pharma, which actually grew by 25-30% last quarter, have actually degrown by almost 7 to 10%. If you see FMCG, there has been a lot of volume decline in a lot of companies, lot of categories, lot of brands. The only positive thing was that the gross margin actually expanded by 200 to 250 basis point, and that saw that a little bit earnings reduction was reduced. Otherwise, the top line and the actual decline has been very severe. Even on the banking sector, the PSU banks continue to report very dismal earnings. If you see, their NII growth was only 5 to 6%. Their stress assets in the system has grown from 8.2 to 8.6%, and the credit growth numbers which came yesterday around 9.2%, that's also very bad. And if we actually dissect it, the PSU banks, which make 75% of the system, are actually growing by less than 8%, while the private sector banks, which make up only 25% of the system, are growing at almost 20%. So there is a lot of stress in the system.
You mean the loan growth, right?
Yeah, I think, yeah, I mean the loan growth. So
PSU banks 8%, private sector banks 20%.
Almost 20%, but PSUs make up 75% of the system. And the problem is that now the stress assets are very high, almost 8.5% to advances for the whole system, the PSU banks. And the capital, and we all know they are starved of capital. So tomorrow, if after 1 or 2 quarters, even if the economy starts growing, the worrying factor is that how will this capital starved PSU banks start again the lending process. So that is another thing which we have to look forward. So yes, there are all these concerns are there, and that has to be addressed. And there is no point building high earnings estimates.
So we should be, I mean, you know, for the purpose of building a model, or I mean, having some number in our head to look at the market and make sense of it, what would you say? Expect, say, around 10%?
Yeah, I think around 10% should be reasonable at this point of time. But yes, we have to look how this situation pans out going forward.
You know, what I am very, if the market surprises on the upside, well, that's great news, right? Markets can always catch up. But the point is, if you're still at 13% and, you know, okay, we can work with 10%, what happens if even that doesn't happen? I'm just asking you, you know, you were saying that, well, if growth comes back, how will PSU banks lend because they don't have capital? That needs to be solved. But I think most people would be happy with the growth coming back. We can figure out bank recapitalization later, but at least let aggregate demand pick up. That seems to be worsening, not improving at the margin. Would you agree with that, Mehrab?
Yeah, the aggregate demand is not actually improving. If you see the rural demand this year, the situation is actually very bad. What the results we see from certain FMCG companies, auto companies, some NBFCs. So the rural demand is very bad, and the urban demand also, what it was expected to pick up, that is actually not happening. Like for example, yesterday the auto numbers came. So the CV cycle, which was expected to pick up, is actually not really happened. The LCV numbers were negative 7.5%. Even on the two-wheeler side, it was negative by the bikes were negative by 3%. So, you know, the rural demand and also the industrial demand is actually not picking up. The only positive factor this time which I saw was that there was a 17% increase in the order book for engineering and capital goods. That is a positive thing, but however, on the ground, the execution is not happening, and that is very low. So that is another cause of concern.
So what will change? I mean, you said that you're talking to companies, they are getting, especially the mid-cap companies, right? You said they're getting worried on the ground, action isn't happening. Larger ones, I mean, you know, they've got cash and they can hold out very lean periods, but it becomes very difficult to for smaller companies, mid-tier, etc.
Yeah, it is becoming difficult for a lot of mid-cap companies when we talk with them. You know, the government is there for more than 1 year and nobody is complaining. Everybody is happy with what the government has been doing and they are talking. But I think now they want some action. If you see, the policies have to move forward, whether it is GST or land acquisition or whatever other policies are there that have to move forward. You know, people are started, at least the mid-caps and the smaller companies are starting to lose little bit of patience, and that is not good if they start to lose patience. So, and that's why the investment demand is not at all picking up, and that is another cause of concern.
What will change this, Mehrab? Because something has to, I mean, it won't, one can say that, well, it's cyclicality and the market sort of moves on it's the ebb and flow of sentiment and a mix of other things. So you can't really force the economy to do anything. It's cyclicality at play. So you can throw any number of solutions at it, but it'll only recover it in its own time. That's one way to look at it. The other way to look at it is, well, you can actually do something to, for example, you know, prevent the collapse of rural demand, as you said. That could be a big risk. You can do things there. You know, urban, you know, spending, for example, infrastructure spending is another thing which you can do. There are things you can do. So you think those things are being done? It's just a matter of time before the impact shows up? What is it?
Yeah, you are perfectly right. I think all these measures the government has to take. Some they are already taking. The reforms they have to continue with. The infrastructure demand, the government spending has to increase. I think it has already increased by 15% last year, but the government spending has to increase, and then only I think the private capital will come in. Yes, the interest rates also have to reduce, but that is not happening as it was expected. After this time's credit policy, as we know, the yields have again started moving up after the dovish statements from the RBI. So the investment cycle has to pick up, the interest rates have to come down, and the government has to show some real positive intent on the ground. I think that will then encourage private capital to come back into the system.
When you say show real big intent on the ground, you mean the government should start spending on the ground?
Yes, I think government should start spending on the ground.
Right. Now, so you also said that the government, if the government were spending, then you said that when you speak to companies, they're all very happy with what the government is doing, right? I mean, actually, we spoke with NHAI, we spoke with road contractors recently. They're all saying, well, take last 4 weeks, for example. I mean, 25,000 crores worth of EPC and BOT projects have been approved. Next couple of weeks, about 18,000 crores. I mean, actually, in the month of June, some 18,000 crores worth of projects are being bid for as we speak. In a week's time after the lowest bidder is announced, letters are handed over, work is expected to be started, and you will see the impact of all of that after monsoon, the rainy season, and maybe you will see the impact on other sectors as well, cement, etc. So is it just a matter of when? I mean, it's a timing issue now, waiting for the recovery, or is there a real underlying risk that if you go in this direction and with the resources that you've allotted, you will not get the desired results?
Yeah, I think like as you mentioned, road is one of the positive sectors within the infrastructure. We are also hearing a lot of action is actually happening on the ground on the road front. But however, the other segments, I don't think much of the action is happening. So I think a lot of the bottlenecks, etc., have to be solved. So today you see everybody is talking about the infrastructure opportunity in India. But when you actually go to invest, except maybe a couple of or a handful of companies, it's very difficult to find good companies, good stocks and managements to actually invest in the infrastructure sector. Yes, cement is a play which people are taking on the infrastructure sector as of now. Though there also, if you see, there has been a volume decline and also price has declined by in some pockets by 10 to 15 rupees. But still, I think cement is one of the positive sector which we will also believe, because if you see, if all these projects pick up, then over the next 3 years, there are some estimates that almost 60 million tons of demand for cement will come, while the capacity addition has been only around 35 million tons. So yes, there is one of the opportunity. The road segment is another opportunity which we are seeing. But besides that, in infrastructure, it's very difficult to find good companies and managements to invest in.
So what is your, you don't take big cash calls or anything, you are long-term investors, you look at big dips to buy. We have a decent dip, right? 10, 15, 11% market correction. You said valuations are down 15%. What are you doing, Mehrab?
Yes, we are also selectively investing. We are investing. One is private banks, where like everybody, we also continue to be positive. So we have increased our exposure in certain, because certain banks have seen good correction over there also. On the PSU ones, we are still, I think after talking with a lot of the banks, I think at least for next couple of quarters, the pain will still persist. And though valuations are really very reasonable, but I think if the pain persists, then we will have a wait and watch policy.
Where, which sector?
On the PSU banking space.
PSU banks, okay. Yeah. Okay. You're not buying them right now?
No, we are little not at the margin.
Because
maybe,
that's
but
where the real bargains are in a way, right?
Yeah, you are right. The real bargains are obviously over there. They are, most of them are trading at much below adjusted book values also. But the problem is that we don't know how much the book will be adjusted. Today, the stress assess is almost 8.5% of the advances for PSU banks. And they are not, and capital is not available. So, yes, we are investing, but we are slightly slow over there. Even if you see the old private sector banks and the smaller ones, when we talk with a lot of them, so corporate lending is anyway not happening. It's very slow. Consortium lending is not giving them any margins. And most of those banks have CASA of hardly 20 to 22%. So the retail is also not picking up. So what they are doing, many of them, just to grow the retail assets, are doing something like LAP, that is loan against property, where they are lending not against the cash flow, but against the value of the assets. So that is another worrying factor which I see in a lot of these smaller private sector banks, or the old private sector banks, if I may call. So yes, so
that's banks, right? Private banks you continue
autos
to buy.
Is another sector, I think, which we are still positive. Yes, there has been a problem with a lot of
four-wheelers, two-wheelers, both.
Four-wheelers is we are very, very positive on four-wheelers. I think yesterday also the numbers came out, it was almost 7% growth. Yes, it has slowed down, but still we continue to remain positive. On the two-wheeler front also, we are exploring opportunities, and though the rural demand has actually slowed down, but hopefully the urban demand should pick up, and then I think we are reasonably positive. On the CV front, we are slightly slow because it is not, the growth is not come as expected. Cement would be another sector which we continue to remain positive, although the valuations are still quite high, and I think another small correction in that sector would give interesting bargains for the longer term. And on the defensive fronts, I think there we are slightly cautious because whether you take IT or whether you take pharma or FMCG, I think the results were much below expectations, and going forward certain headwinds are there. So there we are slightly cautious at this point of time.
But has anything changed there for IT and pharma, according to you?
If you see IT, actually the most of the companies, the results for the growth was slightly below expectation. The cross currency rates, the euro depreciation is not helping them. The headcounts have not been growing as expectation. So yes, there are some pockets, some good companies, but otherwise I think it's better to stay slightly neutral or cautious at this point of time. Even on the pharma front, if you see, a lot of companies are going into some US FDA problems and other things, and even there the currency is affecting them. So I think there also, and the valuations are very rich. Even today the valuations in those sectors are really rich. So I think we'll stay slightly cautious at this point.
Okay. Fair enough. That's Mehrab Irani's view, likes private banks, likes watching PSU banks closely, autos, especially four-wheelers, likes cement, but cautious on IT and pharma. You know, the incredible thing is, Mehrab, a few fund managers that I've spoken to in the last fortnight or so have had the exactly opposite view. they, like IT pharma, don't like anything else. But that's the market for you, right? I mean, different views make the market. That's the beauty of it. Thanks very much, Mehrab. Great speaking with you.
Thank you.
Appreciate you coming in with that perspective.
Thanks.
All right, let's take a quick break here. We are back in